Basically, you can't talk of money and finance without mentioning gold at all. History tells us that it's been part of mankind's economic life since its discovery as a precious metal. As a valuable asset, it becomes more attractive during times of economic uneasiness or political unpredictability. There's a long list of investors who have made their riches by just owning gold. Others who came in late in the game also have horror stories of how the value of their investments took a nosedive along with the prices of gold. It's quite easy to acquire gold if it's in the form of jewelry, but when it comes to investment, there are just typically three main forms, namely, the gold bars and coins in their metal forms, gold exchange traded funds, ETFs, shares in gold mining companies or related gold-producing ventures. Hedge funds, institutional investors and short-term traders can also make a gold investment by choosing other vehicles. They can go via futures contracts, options, and/or CFDs. However, these are all securitized products and carry more risk to investors. For most investors, the first three choices are most advantageous when they want to buy gold. Each one of the three has its own upsides and potential downsides as well. Now, let's discuss the advantages of gold. First, it's a great hedge against inflation. Many investors view gold as the answer and protection against inflation. There are a lot of stories of governments with huge domestic debts in their own currencies that try to lessen the value of their money in comparison to stable standards, so it will be less onerous for them to repay their debts. You're probably familiar with QE1, QE2, and QE3 in the US, where the Federal Reserve did a quantitative easing by massively buying debts from member banks to maintain liquidity in the economy. Practically any country experienced a monetary boost during the last decade. Its effect was that people who held onto their cash, as compared to those who had gold or precious art or houses, practically lost out. Because the government can't create a natural resource like gold, they cannot reduce its value like what they can do with their own currencies. History tells us that the amount of gold in the world has roughly risen with economic growth. It has gone up accordingly with inflation, on average, and kept its, what economists call, real value exceedingly well. To illustrate, note that in the early 1970s, 1 ounce of gold sold for about $35. Assume that during that time, you can choose to keep the $35 in cash or get an ounce of gold. Being of equal value, they would allow you to purchase the same thing, like 30 gallons of milk or a fancy bicycle. Now, if you had an ounce of gold today, it would still allow you to buy a fancy bicycle, plus accessories, safety gears, sneakers, and spare tires. With the $35, you can still buy a kiddie bike or a second-hand bicycle. What we're saying is that you would have lost a good amount of wealth if you decided to keep the cash intact. If you had decided to keep your money in actual gold, you would have multiplied its value by around 33 times. The value of gold has increased while the value of the dollar has declined during the same period. Gold is a safe investment. Perhaps the number one reason for gold's popularity as an investment option is in knowing that the value is going to go up firmly over the years. Historically, you may see that the price dips once in a while, but it always rebounds. Looking at the historical chart as the big picture, you can safely predict that gold is going to increase in worth 10 or 20 years from now. In stocks, bonds, or mutual funds, you always have to hope that a specific company or industry is doing well because the value of your investment is largely dependent on their performance. Not so with gold. Although the current state of the economy does affect gold prices, a dipping economy does not actually bring the gold prices down with it. In fact, it often does the opposite. When the economy is uncertain, people tend to invest more in gold, and this pushes the price even higher. Also, gold supply a great portfolio diversification. Not many would realize it, but investing in gold is an excellent strategy to diversify your portfolio. We've said that the price of gold performs incredibly well even during times of uncertainty. Therefore, a great approach to balance the volatility and returns within your investments is to make gold a part of the roster. More importantly, with gold being part of a diversified portfolio, you can protect yourself from a wealth wipeout in extraordinary situations. No severe economic depression or a stock market crash will zero out your investments. Gold will still be probably standing tall after the smoke clears. An EFT is one of the best options for gold because it beats having to keep the yellow metal in your vault or secret place. This way, you only concern yourself with the price and forget about trying to keep it safe from robbers and other adverse physical conditions. Hedge against a disaster is another advantage of gold investing. Let's not kid ourselves. You invest because you want to make more money, and with it comes the natural fear that your investment may somehow end up worthless in the end. Obviously, that fear becomes less when it comes to gold investing. For example, if we were to have a repeat of the 2008 stock market crash, you would be penniless if your portfolio carried only stocks, bonds, and mutual funds. This is why investors consider gold as a safe haven during times of uncertainty, whether political, financial, or economic. If an investor invested substantially in physical gold for the long term, he would probably be sleeping better. He knows that a financial crisis or global meltdown will not really affect his gold investment negatively. On the contrary, the price of his gold would normally go up during such trying times, because more people turn to physical investment when they see that the financial markets are not giving them a bright hope. And that's it for now. On our website, you can find more posts as well as calculators and other financial tools. Investing in gold? We would love to know your thoughts, so feel free to share them with us in the comments below. I hope you enjoyed it, and don't forget to subscribe to our channel on YouTube to get more free financial educative videos.